Are you thinking of applying for a loan to buy a house? There's probably so many questions going through your head right now. So we're here to answer some of those questions for you. I'm here with Joe Biniaz from Modern Mortgage. Question number one might be, I am on the internet, I'm scouting around looking at different rates. Why wouldn't I just go with the cheapest rate that I see on the internet?
We see that a lot. It's called shopping lenders. Many people are going to go with the lowest rate, but it's not the fact that you're always getting the best deal. There's discount points. Each rate you choose likely is costing thousands of dollars, so be aware that going with the lowest interest rate is not always the best deal that fits your needs. Also, a lender is the one who's protecting your earnest money. Meaning, if the lender messes up, you may lose the $5,000, the $10,000 that you put down up front to the seller. So make sure whoever you choose, you trust.
I want to apply, but I'm afraid my credit score's gonna get dinged. What are the consequences to me applying?
When you pull credit, regardless of what you're doing, it will ding your score because you're doing a hard inquiry. The good news is we only have to pull it one time for every 120 days, 4 months. So when you start the process, you have 4 months consecutively to be able to get that. Now it will ding your score as mentioned, maybe 5 to 10 points, but as long as you continue an on-time payment history record, it's going to go right back up.
What is a discount point?
A discount point is prepaid interest on the property. Keep in mind, the bank is always going to have their best interest in mind. They may like you a lot and say, hey, we will give you this lower interest rate, but they're going to charge you interest up front for it. They're actually going to try to incentivize you to give a higher rate by throwing you money, what's called a lender credit. So a discount point is prepaid interest because the bank knows they're losing money if they give you this rate, so they're going to charge some fees up front.
All right, so how do I know in all this that I'm not going to get ripped off?
I would advise talking to multiple different lenders to make sure they're eligible. You look at all the different types of fees. If I'm not even part of the transaction, I would love to look at your loan estimate for you just to make sure you feel comfortable with the fees that are being charged.
What's the difference? Pre-qualification, pre-approval, pre-underwritten.
A pre-qualification means that you've spoke to a lender and everything may sound good. A pre-approval means that you've sent over a few documents. They can maybe tell your income is accurate. They're willing to lend you the money, but a pre-underwrite is the furthest and strongest you can get before going under contract on a home. That's where all of your information, your income, your asset, your credit, all the package was cleared by underwriting itself. So that it's a commitment to lend, and we just need appraisal and title at that point to make you eligible for the house.
And some words of advice from me who have worked with so many home buyers: get all this done as soon as you think that you're going to buy a house. Because trust me, that dream house is just around the corner, and then we're going to be scrambling to get everything ready. So do it today.